In this video, I'll show you how to build a commitments plan to get your private market portfolio allocation weight projections where you want it to be. Before using the model, you need to make sure it's been properly set up and all necessary inputs have been put in. Build your list such as asset classes or geographical split on tab user controls. Set up basic assumptions, target allocations, and public market inputs. Over time, you will also have actuals on your tabs, actual commitments, and actual cash flows. This will be our starting point today as well. Now I'm on the allocation dashboard, which has several charts related to exposures and commitments. Notice I'm viewing actuals. I could switch that to different views if I wanted to see different level of forecasts. The glide view shows the projections for the current portfolio. The flight view shows projections for current portfolio and any planned commitments that you might have set up. I'm going to go ahead and switch the view to flight because we want to start building a commitment plan that is going to get our projections in line with our targets. The first chart on this tab shows the relative weights of each of our asset classes. For example, green is buyout, purple is growth. The light green range shows the target range for one asset class, in this case, buyout. You can change the asset class in the upper right corner if you wanted to see a different target range. The vertical lines show a particular time period we might be interested in. The last point of actuals or the measurement year for which you want to project the targets. The other charts on this tab show exposure to asset classes in absolute terms, commitments by asset classes and by year, exposure by geographical split, exposure to public versus private markets. So how do we get our exposures where we want them to be? For that, we will go to Planned Commitments tab. In most cases, you will want to expand the columns to see everything on the tab. There are several sections divided by the blue dividers on this tab. The first one is the overall assessment of your commitment strategy versus the available funds you have to execute a strategy, and tells you if you, based on the assumptions, are likely to run into cash shortages. The second section assesses the projected exposure for each class and geography you want to work with. Finally, the last section is where you set up everything to get your projections where you want them to be. Coming up with the right mix of commitments is an iterative process. I'll start by setting up time spans for each of my 4 strategies. I'll build a commitment plan for 15 years for each of them. I can just copy down these time spans so that all of these asset class strategies are aligned in time. And I'll put in $1 million for each to start with. You can instantly see what happens in the projected year 2032. I see I'm a little short on buyouts and I have a little too much in real estate. I can quickly adjust that just by changing the figures in the commitments. I'll put 1.3 or 1.5 million into buyouts, and I'll put into real estate. We can see the charts have updated, but still venture is not within the bounds as it's a little bit above. I'll remove a little bit from venture. And now we are in the target ranges for each of our private sub-asset classes. We're, however, also below our target on the private versus public split. And so we can increase all our commitments by a scaling coefficient. We already had 1.2 put in here. Let's do 1.5. This is just going to multiply our initial commitments by a factor of 1.5 to apply them on a yearly basis. We can still go a little higher. We can put 1.8. And we see that this has gotten up a little bit. Once we are within the ranges for all the targets that we have, we can review our lineup that shows our commitments on a year-by-year basis. And our allocation dashboard shows each of our exposures in a time series chart. We can pick different target ranges to verify. And if we scroll down a little bit, we'll see that we are also within the target range for public versus private markets. However, at a certain point in time, our private market exposure starts to drift down. And that's because our public market has an expected growth rate. So we can correct for that by giving a growth rate to our commitments as well. And if I put in a growth rate of 7% to our commitments, we get a little higher in the measurement year than we want to be. So I'll scale this down a little bit again. And by checking the chart, we can see that at a certain point in time, the proportions start to flatten out and stay stable. I'll just show one more feature. If you didn't want to use these long time series, you could also just override commitment in any given year by using the override section, and therefore the commitment plan can be way more flexible. And that's it. In this video, I'll show you how to build a commitments plan to get your private market portfolio allocation weight projections where you want it to be. And please accept my apologies for the worse audio quality. I'll try to fix that in the future. We have our projected weights where we wanted to have them. There's more videos about the model, so don't hesitate to check them out.